What's up? This is the update Bitcoin. Since we are already close to the end of the month, go over the moving averages and where we are at. All right, so currently, right now, we are riding this 333, right? This is still in distribution. I wouldn't bet on this to go much higher yet until it actually, I would say until it actually closes above this. If we get this move like this here, above this trend, then that would be more solid. So based on what we're looking at here, if I go look at the RSI, all right, we are riding this above this 50 line. The average is still above the 50, which is it still means distribution. And if we look right here, we have that divergence right now. All right, so we have the divergence right there. You still got the rising price while the price is no while the strength is going down, and even on the stochastics, it's still going down. All right, so over time, I would expect this thing to range and it fall into this sort of pattern to where it is a broadening wedge. All right, broadening pattern. So even if it does something similar to this, like this, even if it does something similar to that, to where it would make it back up, I would look for it to claim like back up to a lower high like that and probably continue lower. Same thing like that. Just to retest below this 333. Okay, it's a similar fractal of this previous pattern right here, to where you got a rising price action and you got a dropping. Oops, yeah, and you got the divergence right here, right? And you still had the average that was climbing up. Okay, like this. Okay, it's still climbing up like that. If you look at the average right there, so ultimately, ultimately everything's still pushing downwards. I would still say the momentum at this point is still in distribution to where it's still going down because it is above, like I'm saying, it is above the 333. So the distribution is still going on, and it's not. I'm not saying it's a good time to start grabbing some. I'm saying that it's not that good of a time to buy it yet because you want to buy when you're in accumulation, which is below the 333 here, starting to get below 333 or even below 666. It really depends on what you're going in as, right? Whether you're swinging or you're going in as trading or you're going in as scalping like that, or you're gonna go in for some a different kind of positioning, right? It really depends. So what I would be looking at is that broadening pattern. Even then, you would still see, continue patterns that are similar to. Let me get rid of these first. Patterns that are similar to this. And this is on the daily time frame. Okay, so it's gonna take some time. And 3-day chart, if you look at it, we're still way above. It did one of those chopping, climbing patterns like this. These things, when you see these, they tend to have a very fast move like this. All right, like this, and then they continue. I've seen this a lot on the shorter time frames, and you can see it right here too, like this. Even on this, this is the similar kind of pattern like that we see as a fractal right now. All right, it's a really sharp pattern. So like to see it come down, I wouldn't say right to the 333. I would still say it's gonna come and test this area right here first, this support right here. Why am I saying that? Because typically when you get these pullbacks, they come back and test these support areas right here. So it could take time for this 333 moving average to climb up for this thing to actually come in, fill it in as climbing out. Because if you look at it, like my typical strategy is that 333 is breaking out of the previous price action, previous highs of these real price of the candle price action. So when the averages go above this, that's when you start to get the retracements. Okay, so if you just follow like this right here, like always, okay, these are the same strategies I've always been showing. Typical move. All right, so follow this red line here, over here. So I'll just go right to this point, and as soon as the moving average here breaks out of this one right here, okay, previous highs, okay, right here. As soon as this breaks out, you get the entire bear market started right here. You see, that was the high of this. Once it broke out, the 333 broke out, the top of the bear market kicked in, and we went into the bear market. So is this going to be the top of a bear market right here? I don't think so. I think this is just a reflection of this, um, right here, and it's not over yet. I don't think it's over, not yet. Kind of far from over. It's just a factor of this. Okay. So what do I mean by that is this. Let's see, bars pattern. Yeah, bars pattern. So it'll be like this. Okay, something similar to that is what we're seeing right here. Expand that. Okay. It's not really exactly the same, but what I'm saying is that it is sharing the same kind of factor resemblance to it. And what it is that you would get this put on like in 2021 of summertime there, from April, yeah, from May into June, July, yeah, from June, May 2021 to June 2021, and that was where you get this bottoming formation before you head up. So it doesn't have to go exactly in this formation. No, it doesn't. It could be more of a higher slope. Okay, so that slope, the higher the slope, the more the bullish the pattern will be. So like let's see, like this. So it'll be, yeah, actually, you know what? I'll just use this. It could be like this to where it can hold above here in this middle area here, which if you pull a fib retracement on this, let's see, it's from this point. Oops, wrong way. So I will go from this to this. Okay. And the retracement on this would be 702. So it'll fall to the 702 for the retracement. All right. If not, then we're looking at this level here, right in between here, because it already went to the highs of these levels. It typically comes back to a 233, okay, which is 86,997. If the lowest point will be the 74, 74K, that will be the lowest point. And even right in between here, like if you fall right in between here, that's really bullish. That's at the 93, 92 level that um, has been on the word on the streets for a long time now, actually, and it hasn't hit it yet. Doesn't have to hit it right away, but if it does, yeah, that's where the low is going to be, and we're not going to be going off of the 3-day time frame by that time, right? 3-day time frame is where you're going to be looking for something that's more of a longer term that would end up to be in a the actual reversal. All right, so I'm looking at this. This is why I'm saying it's not the end yet. All right, this is far from over. 3-day time frame. It's really far away from which is so much momentum like this that you don't expect it to go back right away to it. It would take some time. And look at this. Even back in 2021, it didn't take until 20 until the end of the year that it actually rolled over. And up here, you're talking about this actually going up into probably into what do you call this? 2026, right? So I would say somewhere around here, like let's see. Typically, it would be around Q first quarter, so it'd be like February, January, somewhere around there. So something similar to this would be the pattern that I would see that would play out. Um, Daily time frame. Let's see. Let's go here. Yeah, even the daily time frame. I'm gonna move this up here and measure the daily time frame. So since we got these moving up already, this is really good momentum on the daily time frame already for the moving averages. It's it's going up. The average that the price is increasing for Bitcoin is sustainable, which means that it's going up at a price that is going up and it's coming right back down to making higher highs and higher lows. If it's continuously doing that, that is a classic move of bringing these averages higher and higher and higher. It's inflation in the average price. If you get the average price inflated up, eventually it breaks out of the previous highs like this, and then you get pullbacks. Okay, if you pay attention to this, previous high 666, the white one, even the 333, when the 333 came up to it and it broke out into price discovery for this moving average, the blue one, you got the pullback right down to it. Okay, this is what you would call distributing into the rally because the rally is average price going higher. Okay, and you know what? The average price just seems to be the price that most retail does not recognize that the price is going higher, and this is kind of like the FOMO ticker. If you pay attention to the average price going up, the average price going up actually triggers a lot of psychological, FOMO coming into the market. It's not narratives, it's not nothing, it's just numbers going up on the average price. So the average price on the 666, which is in the daily time frame, you got the 666 days going up, and that hits the areas of heavy distribution. Now it's reaching the highest distribution points. Um, you don't need a Fibonacci retracements on this at all. I'm just using this as the area to where you're going to get a good expected price to retrace, which is 702. I'm looking at the 702 to come back to these levels here for the candle action to come. The moving average can come back. If it does come back, I would expect the price to be around these lower levels down below this 80,000 here to actually be retesting this for a double bottom formation similar to this. All right. And that's what I would expect. Something similar to this, to where this would actually come back down. If it broke the 702 and the candles go down here, then it would hit this area here, this lower level to retest this and accumulate down below this 666 as it climbs up. And I would look for this. If that does happen, then this is where heavy accumulation would be, and we would be in extreme fear. I'm not saying by February or March. I'm saying that this is something to expect at least by November or so like that, right? Something similar. So the sooner it drops, the better. And it's not dropping yet. So it might take some time. And the longer it takes, then I would expect this thing to even fall into January, all right? To where it might even take until January until we hit these lows. And you might see something similar to like I drew it before where it was a descending triangle, something similar like this. Okay, oops, wrong line. But it's you could probably look at it in the previous videos. Yeah, just look at the previous videos. The previous video will explain it. And it was a longer term analysis too, so it didn't really matter. All right. But in this time, I'm looking for if the price action goes below the 666 and this falls into accumulation down below this, you're looking for it to catch around these previous supports and previous resistance, basically the SR flip, and then you would see the golden pocket area here is where you want to see this moving average for that 333. You want to see it go and actually sweep that area. Something similar like this. If the price action moves really fast, it could do it to where this thing could go and actually catch right at the 702 to the 666 or even to the 618 golden pocket. Anywhere within this area will be a hot area for this thing to actually do that. While this guy actually goes sideways. Okay, and that's what you want to see. If you want to see this thing diverge back up in continuation for a blow off top, that's what you would want to see. You want to see this because these are the typical classic continuation patterns of a divergence. Okay, similar to this, similar to what you would see in the past here, like this, exactly like this. Okay, that's what you want to see, to where it gets closer and closer and closer to it, but it doesn't even this. It gets closer to it, but it just continues. And that's what you want to see to have this move to actually continues higher. At some point, of course, this will, continue like that, but that's what you want to see. If you get this, then yeah, it's going to return. It will return back to it, and then it will go into a bear market, and it continues its move. It could not even do this. It could just go and stay down here for the remainder of the time and not even do this, and then continue into 2028. It doesn't have to do exactly like that. We might not see anything happen at all. Like there's really no way to tell right now besides looking at the average and just chasing this average. That's the best way I could say when it's gonna do things right now. Like the when part is this moving average. Right now, it's hard to tell. The reason why, because you have nothing but the expansion, and it hasn't, laid out its floor yet. It's starting to level out. If you can see, it's starting to level out. When it starts to level out like this, you're gonna start to see something similar of this, the sideways action. And that's why I'm just waiting on the sideline now, just waiting for accumulation. And it's in distribution. So when it's in heavy distribution like that, at some point you're just gonna get up and down ripsaw until it just trends all the way down to where its lowest point is. And the average price will kill you at the end of the day. Okay? So that's the daily time frame. Let's go to the 4 hour time frame just to see if we can zoom in on this and actually get some more action on the we'll go 8 hour. 8 hour would make sense. Okay. So the 8 hour, you see, it's actually going right below this 8 hour here, and it's actually staying below the 333 in the 8 hour. At the 4 hour, it's actually below it already. It's already crossed. Okay, so this is starting to give me really good signs that this 333 wants to go as close as it can to the 666. All right, and here's the thing: Bitcoin's been down to, over $10,000 already, and it hasn't recovered. Okay, so these tiny little bounces, don't even bet that they're going to go higher. I wouldn't. I wouldn't. At least not yet. All right, like I'm saying, it's got to get below this. You already have one hit, two hit, three hit. The fourth hit tends to go down below it, and if the fourth hit goes below it, start getting these targets down below already. You got the divergence up here already. Once you get a divergence like this and it fails to continue and actually break out of a certain trend like this is the biggest part where I'm concerned about the most. That it didn't even make it above to this trend to even meet up with it. Okay, to meet up with this trend to confirm it, even with this divergence right here. This is the sad part that I saw. Once we had the divergence here, I thought it was going to just do this and top out at this area here, and then we could get the recovery down and actually go high, I mean, not recovery, but retracement down to go higher. But we didn't get that. We didn't even get that. So at this point, this is what I'm saying. If we see the divergence like this and we fail here, it's already starting to distribute into this rally, then the measured move for this to come back down to is going to be at this level right here where it got the divergence. So that's why I'm looking and I'm targeting 80,000 and below. I wouldn't mind actually catching right back at these low levels here, especially right here when it was about to cross. So this level right here is actually a really good level, especially if you hit right here. If you hit right at the 333 right here at the 62,000, this will be extreme fear levels, and this will erase just about everything that happened back in October 2024, November. It will literally erase the Trump rally. Okay, it will literally erase the Trump rally. It almost did it here, but you got the divergence up here. And now that I'm seeing this, I would say this. I would say something like this. This would be the the way that this would probably play out. I wouldn't be surprised that you get some sort of Adam and Eve formation like this, and then it takes off. Okay, I wouldn't be surprised if that happens. Okay, if that does happen, then yeah, you heard it here. But I'm saying that I wouldn't be surprised because these are the typical returns that you will get if you have these patterns here. And it's no different from right here. It's another fractal of this that you would see something that would come up, curve down, and then continue up. This one come up like that, curve down, and it'll continue up. All right. I'm just saying that these are the ways I see things. It's not going to have to play out that way, but if it does, you heard it here. All right. I'm not always right about this, but I'll tell you what, I do know when these things can flip around, and these moving averages like this, they're diverging, but they're not diverging as powerful as it did before because it already got sold into, distributed into. There's going to be a retracement at this point, and once this retracement plays out, it's going to be pretty heavy. It's going to be really, really fast. You don't want to be caught up in it, so don't be leveraging heavy on this at this point and thinking that it's going to go higher. All right. If you're right, good for you. If you're wrong, you're going to know exactly what I mean. I don't want anybody to be wrong about this right now, getting caught up in this, because the easiest way to go to get hit with this is just going long above the going long while it's in a distribution. You can go long when you see the divergence like this. If you're looking for longing above these 666, look for the divergence like this. Then you want to go long on these averages, not on the candles, on the averages. All right. So these are the plays I'm going off of. Right. I'm waiting until this actually goes to show itself. It's going to go below. If it goes below, I will get into position on these averages here. These are the best positions to get into, below the 666, like these. These are not perfect, but these were the ones that like here's the thing, when they start to diverge like this, when they start to bounce really sharp and doesn't go below the 666 that often, then when it does go below it and it recovers that quick, all right, that's a very good sign of an incoming divergence, upcoming divergence up ahead. And it bounced here. Does this mean that there's going to be a divergence? No, absolutely not. Not yet. Not until it gets above this, okay, above the 666 and actually holds it for multiple days, which means probably about 6 or even 12 days, I would say, being above it like this. Then you would see the divergence of these guys start to expand, right? And start to expand up. And this is what you saw expansion here, but it started to diverge already on the way down because you got distributed into. Okay, so this is what I'm saying. When you see this happen the first time and you see it the second time, this is a little bit wider, but this gives you enough room that this might not go all the way down. All right, but that's the reason why this next it's not going to go into a bear market because you already got expansion here that's wider than this one, which means that there's just more money coming in and more conviction. I'm going to say it like that, as easy as that is. Okay, so I'm going to lay this down as the floor, as the middle area right here. Okay, I'll use the bottom of this moving average for 3 to 3. All right, and that's gonna be 62,000. If you hit this level, man, this is where you want to grab it as hard as you can. It's not going below this line. It is not. All right, it is not going down below this line. The average might come up to this line. It could. It's possible for this to actually roll over to this point if it takes long enough. For example, if it lasts until January, this thing might actually roll over, and the moving average could actually roll over until January and then roll back up. Okay, and that's the thing. This is still just a waiting period. Why? Because we're on the daily time frame, all right, on 12-hour time frame. But even then, the daily time frame still needs to do its thing, right? So right now we are building up momentum to the downside, and as you can see, you can even see that we're not recovering the $10,000 that was lost already at these highs from 125 all the way down to this point where it's still 110. It's about $15,000 lower. Don't be surprised if before you know it, it's down to 100,000 because you lose another 10,000. Okay, it's just a matter of time before it gets down there. So if I was to even measure these fibs like this, like it's just gonna go lower. And if it does go lower, you're getting the full extension all the way down to this level, 65,000, right? Even these extensions here are sitting here ready and waiting to be taken. Like 98,000 is still sitting there too, all right? Like one of the greatest things you could say, like this 8 hour one right here is probably going to touch these levels first. Okay, wherever these death crosses and golden crosses were, it's going to come back and claim these levels. These levels get claimed a lot, like this. Okay, so I'm going to go off of those. I'm off of the daily time frame, including the 8 hour and the 12 hour. I'm not going to use the 4 hour because the 4 hour is already death crossed, right? So like this, 4 hours already death crossed, which is why you don't see much money coming back in. All right, so you get a death cross like that, it will show itself like similar to this. Get a death cross like that, it will get a lot of resistance and it will chop down there. Probably gonna get three touches down there. Might even be a little bit more than three touches. We got like what 1, 2. You're probably gonna get another rollover at some point from this point on the 4 hour chart that will probably roll over and retest these trends. So I'm gonna draw a trend here like this just for the hell of it, right? It's just going to be right here. I wouldn't be surprised if we touch this in 99 to 98 and then have this recovery back up into the expansion just like this, only for it to have a chance to test or break out and then fail. Okay, like that's how it's going to build into the larger time frames. 12 hour. If this is going to get closer to cross, then yeah, it's going to go to these levels down below. As you can see, there is these red levels here that are levels to where you had these crosses. All right. So that's just how I look at things, and it's just a matter of time until then. But for now, I wouldn't trade in short term. No, I mean like looking for high leverage, at least for longs, right? You could trade, but you should be scalping. You should be in, you should be out if you're looking for this. At 1 minute time frame, you can do it. I haven't really done it lately because there's really uh, yeah, it's really challenging to actually do this right now on the 1 minute. You can because you're above it, just take it. You're below it, just buy it because you will bounce. All right, you will bounce below the 666. Okay, it does that a lot. All right, but you gotta use proper leverage. You gotta use proper leverage if you're gonna do this. You gotta know what you're doing. All right, which means you gotta have at least some idea of how these crosses are gonna cross like this. Okay, this is what I would do in the 1 minute, and then that'll be it for the day because I'm not gonna look for a long analysis on this when it doesn't require that much time to even look at this. So these are where the stops should be placed. Like if you get like it has a high chance of hitting these. These are like where the entries should be placed, and your stops like this. Your stops should be placed like these areas, but from what I've noticed before, sometimes you're like wherever you place the stop, like I've tried it before, and it's still an experimental phase for me, to where sometimes I would not put as a stop there, but place another limit order long, to the point where I'm just gonna long and long from where I'm gonna long from right here, and like for example, if my stop is gonna be here, I would long here instead and place my stop down like somewhere lower, you know, because of the fact that um, a lot of times when stops get triggered, that's exactly where you want to long because that it stops you out before then, right? So you might as well put it where you get it stopped out, and you'll be surprised at how often that does do it. All right. So another one too is this below this moving average. If you enter your longs below this moving average here, a lot of times it does work out. Okay, a lot of times it does. This here didn't really do it. If you look at here, it didn't really do it. It actually came right into this. Even if you came to this cross, this actually came right to the previous lows here. Okay, right to this level. Okay, this is why the 1 minute time frame is kind of hard to do it with, because it's just a matter of how you can measure it, right? Even if I was to look, I'm not totally measuring it off of that all the time. Like many times I measure it off of, here, let me get Fibonacci. So if I was to look at this, if this was to break down already at this point, from this breakdown, I would have already done the measurement tool already on this. All right. My zones for me on the 1 minute time frame, if I was to look at this, would be the 1.702. This level right here would be the level to where I'm looking for the entry. And if it has a lot of momentum at this point to even get to this point right here, this is exactly where you were looking to enter. But remember, when you're looking to enter, it's like right here. That's 1.72. When you're looking to enter, what's interesting about that is where you're going to put your stop down here at the lows. And look at this, go down, grab your stop before it took off. You see what I'm saying? These are those things that I'm just talking about. That if you really want to um, trade these, then you should already know what you're doing, especially on a shorter time frame because it's fast, right? But if you don't know how to do it, I would stay away from 1 minute and I would stay in these swings because overall your win rate will increase drastically, and you'll be sitting around anywhere from 75 to 80% win rate if you follow the rules by staying on a larger time frame. That's why I'm showing you these on the daily time frame, even the 12 hour, in 8 hour. I'm not showing you these on 1 minute. I got a live one that shows on the 1 minute already. You can watch that one if you really want to know how to do on the 1 minute. But I wouldn't recommend it. I wouldn't recommend it. It's extremely challenging to do. All right, it is extremely hard to do. All right, Ethereum. Quickly do Ethereum. Let's see. Let's see daily time frame for Ethereum. All right, here we are. Still far away from it. It's still expanding up. You getting some form of the divergence here, but it went below it and sweep darted above it. Technically, that doesn't mean it's going to go up. That technically means that it's going to go sideways in a range. I would look for this right here to be the floor, to where this breaks out. Once you get the three breaking out of the previous high and this previous high here too, then you would have a chance of Ethereum outperforming Bitcoin. Okay, and that's the thing. This made a lower high than this. That's not good. Okay, look at the reaction to it. That just means that there's a lot of whales that's sitting here dumping this into and distributing into Bitcoin. When the price goes high enough, it distributes back into Bitcoin. The average price is climbing back up there. Does it mean it's going to make it? I don't know if it's going to do it right away. I doubt it. I doubt it's going to do it right away. I think it's going to do it after Bitcoin makes a new high. I'd wait. I'd wait for Bitcoin to make a new high. Bitcoin's always the leader of the game. Okay, wait for Bitcoin to make a new high. Bitcoin makes a new high. This guy can probably come back up and retest these trend lines, but it doesn't mean it's going to break out. I would even expect a lower high at this point. Something that goes right up to right where it's at right now, actually. So I wouldn't chase anything major with Ethereum. It's gonna hold its downtrend. All right. In fact, it's still holding the same fractal that it looks like to the left. And you got, let's see, one, two, three. That's fourth hit. Okay, that's four waves up, and it slammed right into the ceiling. So I'm saying that if this was to come back down, it'll probably sweep down below the 666 one more time before one more run. Typically, I would say if was to do a fib, let's see if it's the fib. Oops, wrong way. Sorry. Do right at the breakdown. Yeah, if it was to come back down, I would say this thing to come back down to like the 2,200, around right around the area for the fib. If it's to fully extend, right, down to this lowest point is right here, or even down to this level, the 2100. But the first level I would say for it to go and slam into would be this area right here around the 2700. We're at the 702 and the 666. So 27, even the golden pocket. So I'm gonna do something like this. All right, something similar to this, like this. Okay, I will look for this, something like right here. Okay, and it's interesting because on the daily time frame you got the crosses of the moving averages right there, right inside this range. If it does do so, then yeah, that's what I would expect for Ethereum. Don't chase this. Be careful with this because this is very, very distribution is very tricky. Okay, it's really tricky. It's meant for you to it's designed for you to buy into their selling. That's what it's designed to do. So, and it runs off of averages. Okay, so if you want to be able to not get distributed into and be exit liquidity for some of these traders, then I would not chase this and respect the pump by taking your profits. All right, especially if you're in altcoins. Okay, so I'll get rid of this and I'll keep these range here. If this hits it later on, you saw it here. All right. All right, what's next? Let's go to, I'll just do the big ones. I'll just do Solana. All right, I'll just do Solana with it. Uh, So we got SOL. All right, this is on Binance. So let's see. We got, yeah, you see it's still riding right there, and this diamond formation is still in. I'm still looking at this diamond formation. Okay, I've been looking at this diamond formation for some time now in the daily time frame. It's still doing its thing. It's still doing its thing. In fact, it's a gigantic dragon's eye in my opinion too. So something like this. Okay, it's still a diamond formation. Okay, something like this. Okay, yeah, that's like super like sloppy, right? But here, let me. I'll put it out better. Okay, so let me get that line path. So it's not. It doesn't have to be perfect. Just know that the diamond formations they do play out a certain way. All right, they do play out a certain way, and in fact, if just a quick way to just measure it will be from this point to this point, right? And that's what we're looking at for this thing to actually break out if it's going to go up. Okay, but this is a diamond formation that's a reversal pattern from the highs. So I would look for this to actually come down. If this was to break down, I'm looking for this thing to come back all the way down to these lower levels, to this range. And it's, funnily enough, it's right to the cross down here, okay? So Solana is something that is really tricky. I would be very careful with this beast, all right? This thing is designed to destroy you, okay? And it's not friendly. Okay, it's designed to take all your Bitcoin. If you're investing Bitcoin into it to trading as a trading pair, it's very good at taking your Bitcoin. You gotta be very patient with this guy when you get with your plan to trade it or even invest into it. It's gonna do its moves. It's gonna fulfill what it's gonna do, but you gotta let it do its thing. Um, I would look at this move right now. If it was to go down, I measure this point going into accumulation. Wait for it to go into accumulation. Trust me. If you just wait for them to go into accumulation, it's already curving down. Like the average is already bending down. So I'd be very careful with this. That if this thing was to go down, it would trap you at the lower levels down here below at the 702, even at the 154 at the 1.555. All right. So anywhere below these, that is where you want to see this thing try to attempt to break out of the diamond formation and to get to the lows. If you do get to the lows down below here, that's where you want to grab it. Okay, and the market will be in extreme fear. And I explained it before in my shorts. It's simple, super simple to do. If you just trade it according to the fear and greed index and respond to it accordingly, using the 666 here and the 333, whichever one you want to use. I would say 666. You can use both. Both of them are pretty good. Okay, but you can just use 666 only if you really want to keep it simple and just worry about below. So when it's below the 666 and you're in extreme fear, that's when you want to go long. That's when you want to work at this thing to go back up and just expect it to go back up. This is where disbelief kicks in at these low levels here, below 666. Okay, it kicks in below this. These are where your best long positions will be positioned down below the 666. All right. It's not forever. As you can see, if it does come back and retrace this, it will erase everything. But that's what you want to do is when it does go below the 666 like this is when you want to have the most conviction. Okay. This is where you want to position yourself, of course, and not up here. That's what I'm saying. So you should be shorting at these highs. That's what I'm getting to. All right. You should be looking for shorts. You should be taking your profits. These are just profit taking. That's what it looks like. Okay, so that's why I'm looking for Sol. Sol is curving over already. I would expect this thing to just death cross at some point. It already did its, what do you call this? It already did its. I don't know if it's gonna death cross right away. It looks like it's about to like get closer and closer, so it could slowly like curve down. Here, let me get this line right here to the 702. Okay, so it could slowly curve down into it like this. Like this is what I'm looking for. Something similar to like this, and then diverge again only to then roll over and then continue up like that. Something similar to it. Not this sharp, but that's what I would expect by at least February, March, right? To get a divergence like that to actually run back up and have that altcoin season that everybody's like looking for. And it's happening to be at the beginning of 2026. All right. And the worst case scenario is this. If you want to see the speed, all right? The speed will show you conviction. If the speed of this drop goes right through everything like this and super fast, like what we saw in the last few weeks of how Aave went all the way back down and everything else dropped drastically and massive liquidations happened. If this happens on the daily time frame for these altcoins, that's the bottom. Okay, that's the bottom. Don't cry bear market. Just it is bear market in terms of like price action, but that's where you want to get in. All right, so you should be looking for positions by then to buy. And I already gave you certain targets ready. So measure your own or look at these targets here, up to you, whichever one you want to do. So that's it. That's Solana, Ethereum, and Bitcoin. If you want to see anything else, just put it in the comments or anything like that, and I'll know what to look at next time. All right, peace out. Laters.